Yeah, look, the markets have got very elevated inflation expectations in the United States in particular. And the gap between expected inflation and realised inflation has actually almost never been wider. So we really haven't put too much rubber on the road as yet. But I think, given that we are either at or very close to the peak of the business cycle, we still believe in cyclical inflation rather than secular inflation. And this is the point at which we should be seeing inflationary impulse. Now, in other parts of the world, we haven't seen anything like this. So as much as we're at full employment essentially in the Western world, we're not triggering those usual cycle inflationary type outcomes, but everybody really has the central expectation that it will turn up in the United States. I think as energy markets continue to rally, and we're certainly seeing oil have a pretty good run at the moment, there is going to be some impulse coming through. But it's important that we recognise that coming from ultra low up to low, yes, it's inflationary, but we're not going back to 4 or 5% inflation anytime soon. And if we do, we're going to have vast asset deflation, because the normalisation of that complex means that you can buy a house in Melbourne or Sydney again for $500,000. That's very unlikely to come to pass. I mean, the debt burdens simply don't allow for that inflationary impulse to take off, because people's consumptive habits will be curtailed very viciously under higher interest rate outcomes.